stop placements are very important. Um, where you put them and having multiple levels of protection to protect the stop from your entry point. Um, Price does not move in a straight line, so it's important to have barriers in between your entry point and your stop placement. There are going to be good trades that you want to get into, but you may not be able to have a safe stop, and it might prevent you from taking the trade. In this example that I have here, this is the Australian dollar, New Zealand dollar. This trade was taken on the 28th of August, right here. And this is just a good example of having multiple layers in between your entry and your stop. The barriers I have in here are the fib retracement, the 0.618 is protecting. I have the stop all the way up to the 0.75. This trend line is protecting the stop, and this horizontal support and resistance that has been broken and then retested is also protecting the stop. And at the time of the entry, the 50 EMA was also being acting as support. So, or excuse me, resistance. So you can see after the entry, price came up and rejected the trend line again and retested the 0.618. So from this entry, it could have just kept falling down and it would not have mattered having all these layers protecting it. But as you can see, the price popped up after the entry and did respect the trend line and 0.618. So those two were still holding price from going up higher and taking you out of the position. So I'm going to swap over to the daily just so you can kind of see what was going on. Price had come up, it needed a pullback. There was a historical resistance line back here from 2018. And after this bullish day, it broke down, and then I was looking for a pullback on the lower time frames. So here was that breakdown that I just showed you on the daily, and then this was the pullback. And here is the 4 hour, which is going to look a little cleaner. You can see this was the daily breakdown and then the pullback. And after this high test candle, it started to break down, and that's where I got in on the 1 hour. The lines, I'm just going to go ahead and delete all of the tools I have drawn in just to show you how to draw them in. I'm going to try to keep from messing my stop up or my position size. Well, I'll go back and fix it. So here's the 4 hour. Here's that trend line I had in. And again, I have a video on this. You want to draw through the open and close down here. So through this open and close, and through this open and close, and so right about here. Here's the horizontal line I had in. Again, through the open and close as close as you can. If they differ like this, a lot of times I will go through the open and close of the most recent points. These lines are on the lower time frames, they're not going to be as clean as on the daily chart. And then the fib that I had drawn in was from the most recent highs down to the most recent lows. So right there. So you can see here's where my stop was, and it was protected at the time of the entry, and popped up, rejected, and now it's going back to the downside. So on the 1 hour, this may not be exactly how I had it, but it is still showing the same analysis. And I can go to the 5-minute and show you. I'll show you exactly where I got in. So the 5-minute chart is not for technical analysis. I just use it as an entry. And right here, this strong bearish candle, when it broke the 50 MA, that's where I got in at. I was already liking the 1 hour, the 4 hour, the daily. Once it showed this strong bearish momentum, that's where I got in at. So back to the 1 hour so you can see it. At a 35 pip stop. 350, and I believe this was so 3.5% target roughly. There's support and resistance on the daily at 1.082 around here, so that's roughly where the target is. And I'll just be watching this, see how it plays out. But this is what you want to do with your stops. You want to have multiple layers between where you enter your trade and where your stop is. So if price pops up, there's things that it can reject before it takes you out of the trade. If it pops up and breaks all these levels, then it has proven your bias wrong. So these are just easy things to look at. Some people, if they put their stop above the most recent price action or not above 0.618, it could have taken you out here depending exactly on where your stop was. So that would not have been a well protected stop, and it's just an easy thing to spend some extra time on the lower time frames, making sure that you're going to be protected to give your trade the best chance. Hopefully this makes sense. Sorry, I had some kids running around screaming in the background, so I had to shut it off for a second. But hopefully this is pretty clear on what you can do to help protect your stop. This isn't how every trade's going to look, but this was just a good example where I felt like it popped back up, and those other layers of protection helped to really protect the stop placement and give the trade the best chance to play out and give it a chance to reach the target profit target. So if you have any questions, leave them in the comments, and I'll be happy to help you.